Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Brien Lundin. We're going to be discussing how the North American investor, which has picked up interest in GLD, the ETF that follows the gold price, how some of that money might be filtering down more into some of the equities, with even some of the largest miners now trading up close to or at all-time highs. Brien is the editor of the Gold Newsletter, also our host at the New Orleans Investment Conference, this year happening November 20th to 23rd. I'll post a link in the show notes so you can find out more about that conference and hopefully join us down in New Orleans. Now, Brien, last time we chatted a couple weeks ago, we talked about some of that data from July that showed North American investors moving into GLD, the shift maybe from the Eastern buyer to the West investor. But the question is, how is that filtering down into some of the stocks? GDX, GDXJ, they've still done pretty well. And as I said, some of the largest miners and even some of the larger royalty companies are doing quite well. What's your take on, again, how that North American investor can filter into more of the gold equities?
Yeah, thank you, Corey. The big story really is that the first phase of this bull market was primarily driven by central bank buying and Chinese domestic investing, and not so much the Western investors because they really didn't understand or have faith in those factors going forward. But what they can really sink their teeth into is the Fed pivot. And we started to see Western investors, not only in gold, but all risk assets, start to price in that Fed pivot around early July. In gold, that was evidenced by the increases in GLD, the gold ETF. Those holdings started to rise finally in early July. And over the past couple of weeks, since about the first or second week of August, we started to finally see GDX mining ETF start to outperform gold. Now, over the past few days, that we've seen a bit of a counter trend in that. We've seen the ongoing decline in the dollar index kind of bounce. The dollar index has bounced off that key 100 level. So we've had a bit of a counter trend move. But, I'm really encouraged that despite all of that, gold has bounced back on every setback. It's been one step backward, two steps forward. We're putting some cushion over $2,500. And I think, and I fully expect that the generalist investors are going to continue looking at the numbers that are coming from the big gold miners and allocating some funds into that sector. They've been dipping their toes into the water, and I think they're going to jump in over the weeks just ahead.
Well, Brien, let's dig into that topic a little bit more with the senior producers and mid-tier producers finally making some money now. We were talking off mic a little bit about how there's margin expansion finally. We've seen costs moderate. We've seen the metal prices move higher. Some of the big boys starting to move. How do you think that sets us up for the next leg of the bull market?
Yeah, the generalist investors can't ignore cash flow. It becomes not just a value story at current valuations for these big miners, but a growth story because they're turning out such tremendous cash flows right now. The key is that the gold price has surged and it's gotten very little airplay in the major media. It's been faced with a lot of skepticism by the old hands in the market like us as the price has risen. But lo and behold, here we are at $2,500, a number that we would not have dared to predict a few months ago, for fear of damaging what little credibility we may have as gold bugs and analysts. But we're here, and that changes so much in this market. Over the past quarter or even two, the gold price has risen far more quickly than costs for production and the OPEX for miners. We've seen energy costs actually fall over that period. So margins have been rapidly expanding. And there's just gravy being served up on the earnings reports from these miners right now. And the market can't ignore that for very long. And they're starting to really move into the sector right now.
So, Brian, let's talk time frame on this rally because gold, you can argue, has been moving up ever since, let's say, 2015, 2016 when it made that low, but it really got going in about 2018, moved higher through 2020, kind of sideways consolidation for a couple years, and then has started to really take off this year. When we turn the calendar into March, the stocks, GDX, for instance, that really started moving in March. It was going sideways for a while. So how do you classify what stage we are in for this bull market? Clearly for gold, and it looks like for the stocks as well. But again, it seems kind of early stage because it's mostly just the majors and the stronger mid-tiers running.
Yeah, if you look at the ratios, then technically the miners have been generally outperforming gold since the beginning of this move, but they haven't been performing as we would have expected them to. Gold at $2,500, we would have expected the majors to have done much better and the enthusiasm to have already filtered into the junior miners. But again, I think the real starting gun for this market has come or is coming with the long-awaited Fed pivot. You know, the buyers to date, the central banks and the Chinese, they don't buy mining stocks. They buy the physical metal. And in some cases in China now, they're leveraging that through the Shanghai Futures Exchange. But they don't typically buy the mining stocks, or at least the Western-oriented mining stocks. That needs the Western investors, and that's where some of the really big money lies. That's where they need to come into the sector. And I know we've talked about it many times, but this market that we're in is absolutely minuscule compared against the huge oceans of liquidity out there that are sloshing around in all of the bigger market sectors. And it doesn't take much of a splash from these markets, from those capital pools into the mining stock market to make huge differences in valuations. I think that's going to happen. I think it's happening right now. So, yeah, it's tough to counsel patience after all we've been through, but I think we're really on the cusp of the kind of market that we saw in the 2000s, and it's going to happen. And the macro picture really does argue for a longer term secular bull market in the metals and the mining stocks from here on out.
Well, Brian, if you think about people listening to this interview, there's a lot of them that will think, okay, well, we've been hearing the same kind of narrative for a while, and we're looking at record high gold prices and costs moderating. If you think about the average cost in the industry, it's probably about $1,500, maybe $1,600 an ounce right now of gold to get it out of the ground, all in sustaining cost. At $2,500 gold, you got a $1,000 spread there or a $900 spread. Those are actually the biggest margins we've ever seen, bigger than 2020, bigger than 2018, 2016. I mean, these are the biggest margins the sector has ever seen. And yet GDX is not even above its 2022 peak or its 2020 peak, much less, the peaks we saw back in 2011. Do you think the disconnect here starts to catch up? Because a lot of people are thinking maybe this time is different. Maybe the investor interest is just not going to come back to the sector. How would you respond to those people listening, maybe with a tint of skepticism in their ears?
Yeah, you love to see that skepticism. That just means this is going to be a longer term market. It's not going to be a quick flash in the pan. It's got a lot of unspent buying fuel. So if you are contrarian, and that's kind of the natural bent of all of us involved in this sector, you got to like to see that the background, the foundation has been built for this market, but we're still skeptical. There's lots of opportunity remaining. And the market, I think, will eventually recognize that. One of the areas that I think offers particular value right now are those companies that have long been optionality plays in the market. The companies that have had big gold resources that were out of the money, uneconomic at then current gold prices. Well, at $2,500 gold, about every one of those out of the money optionality plays, they have economics that absolutely sing now. And they're not priced to reflect that. I think that's where you have really discovery, drill hole kind of play potential with companies that have proven resources. So your downside is somewhat protected, but your upside is exceptional. There's a number of companies out there like that right now. I think Seabridge is a company that we recommended a couple months ago in Gold Newsletter and has been performing very well. I think it's one of the preeminent ones right now because the numbers with that company are just mind-boggling.
So, Brien, when is this money also going to filter into silver? Because as well as silver has done, it's like GDX. It's still a long way off from its all-time highs. It's still a little bit off of where it was trading. Well, it's had some breakouts. But again, it's nowhere close to that $50 level. And the silver stocks, those also continue to struggle. So what's it going to take to filter some of this money into silver and the silver equities?
Yeah, silver is a victim of its history and its reputation as being also an industrial metal. Because when there's some downturn or bearish economic data or fear of recession or fear of a downturn, further downturn in China, it's used as a cudgel to beat over the head of the silver market. But in a monetarily based long-term gold bull market, silver has always outperformed gold, but it has to get clearly past that $30 to $32 level before I think that people will start to look at it as having that potential to approach its previous $50 nominal highs. And we just have to get there, and it has to prove that it can stay above that $32 level for a while. It's going to come, I believe, because it always has before, and that's the easiest thing to project is silver's outperformance of gold. We do have to remember that it also outperforms gold on declines, but so far in this market, it has bounced back every time it's gotten knocked down. Now, I think once we get past that pivot, which I think is a risk point for gold, I think we may have a sell-off once the Fed actually pivots and people who have bought the rumor then sell the news. Once we get past that potential little downturn, I think silver is going to offer the kind of optionality on gold that it's been known for.
Well, Brien, another line of thought is that since silver is an industrial metal and a precious metal, but more weighted now to industrial, that it really tracks copper closer to gold, but it's kind of stuck in between the two. If we look at the red metal, Dr. Copper, it had a great move in May and then has corrected down hard. It's recently started to bounce a little bit, though. So what's your outlook on copper kind of as a bellwether for the base metals?
Yeah, it is the bellwether of the base metals in my view. I think out of all of the base metals, out of all of the energy/battery metals, I think copper is the safest and probably the highest potential play right now. The tough thing with copper is it's not that easy to find the junior mining stocks that can really have the kind of explosive upside in that sector. Generally speaking, a sizable copper deposit demands the involvement of a big JV partner, a major miner. So therefore, the interests are diluted. In some cases, the news flow is diluted, and it just doesn't have that explosive upside that a gold discovery may have. There are notable exceptions to this, of course, but I think copper is one of those plays where you find a company with a sizable deposit and you set it and forget it. You look back, you buy it, and you look for a 3-year time frame before you see things really start to move. But copper is one of those stories. If you look at the supply demand curves that lie ahead, it's one of the most powerful and really fundamentally based stories out there. And I don't see how the copper price is not going to double over the next 4 years or so.
Overall, then, hey, a lot of opportunities still, potentially in the underlying equities with the support of higher metals prices. Gold's been doing a lot of the heavy lifting. It's been doing its job. Silver was on quite a run. It's flatlined over the last couple months, but still generally at historically high prices. Not at its highs, though. And copper had that breakout, still setting up above $4. So that's not a bad, again, historical price for copper. Overall, I know a lot of people just waiting for that money to filter down into all of the stocks, but we have seen some key moves in a lot of other stocks. Brien, again, the editor of the Gold Newsletter and our host at the New Orleans Investment Conference. Click that link below, and we hope you can visit us down in New Orleans, November 20th to 23rd. Brien, thank you for your time today.
Thanks, guys. Great to hear from you. Great to talk.